Hello there, this is the Bookkeeping Master on YouTube. Welcome to this video, the top 5 bookkeeping mistakes and how to avoid them. I've been a bookkeeper and an accountant for over 15 years. I know what I'm talking about. I've worked with many businesses. I've worked with a variety of bookkeeping software packages. I've seen these mistakes over and over again. I know how to avoid them. Let's jump right in. Number 1 is duplicate transactions. It's very easy to duplicate transactions when bookkeeping. You can get slightly distracted and you enter something twice. Even if you're using a banking feed, say, that feeds into bookkeeping software and you're allocating things with some sort of automated rule, duplicates can still happen. Invoices can be entered twice. Something can be entered manually, which has already been entered through a bank feed. These duplicates happen. Don't feel bad if you have duplicate transactions. You just need to make sure you spot them and that you rectify them, usually by reversing them or deleting them. How to avoid duplicate transactions? What's the best way to avoid duplicate transactions and ensure that they don't show on the accounts undetected? It is reconciliations. Yay! Who loves reconciliations? I do. Do a bank reconciliation frequently and reconcile as many accounts as you can as frequently as possible. That includes credit card accounts, savings accounts, loan accounts, supplier accounts if you can, if you have a statement from a supplier. Reconcile all these things. If you have bookkeeping software such as Sage, Xero, QuickBooks, and I have training videos, tutorials for all those software packages and how to do reconciliations on them. So if you're using accounting software, bookkeeping software, it's much easier to do. Do your reconciliations. If you want to know how, check out my other videos. If you don't know what a reconciliation is, learn. Once again, I have videos on this. I even have a whole course to teach you about reconciliations from beginning to end, and I'll share these things at the end of the video. Number 2, missing transactions. I think this is more common than duplicate transactions. It's easy to miss transactions. It's easy to oversee something, especially if it doesn't show on a bank statement, but they're easy enough to miss themselves. What I mean by transactions that don't show on a bank statement, so things like interest you're incurring and you only receive a statement, say, once a year for that, or items paid for in physical cash, so petty cash transactions, they can easily be missed. Payments to suppliers, payments from customers, these things can be missed. How to avoid missing transactions, how to rectify missing transactions, detect them as quickly as possible. Once again, yay, reconciliations. It is reconciliations. Reconcile everything. Once again, I have lots of material on these things, all for free. If you do reconciliations, you are going to eliminate duplicate transactions. You're also going to add missing transactions. Don't worry. Every answer to every problem is not going to be reconciliations. Bear with me. Okay, number 3, misposting net wages. This is very common. I see it over and over again. Wages go to employees. The wages leave the bank account, the business bank account, and they get posted to an expense account. Generally an expense account that says wages and salaries or gross wages. Either of them are wrong. When the money leaves the bank account, that is not an expense. And it's easy to think that it is because wages and salaries are expenses. So the money leaving the bank account surely is an expense, but it's not. It is a payment to the net wages control account or net wages liability. So payments leaving the bank account to employees are not expenses. They're clearing a liability. To fix this, to avoid this from happening, do the wages journals. The wages journals will record the wages expense and post the amount owed to employees to that net wages control account or net wages liability account, and then the payment leaving the bank account will clear that liability. Once again, if you want to learn about wages journals, I have lots of free material and I'll cover this at the end of the video. Number 4, drum roll please. Assets recorded as expenses. Another common mistake. When I go through the profit and loss and look at the expenses, I can see things like computer equipment, new office computers, sometimes even the new company van posted as an expense. These things are assets. They should not show on the profit and loss as expenses. Now, the best way I think to avoid this happening is to ensure that you actually have the asset categories added to your bookkeeping software. That on the balance sheet you have fixed assets for plant and machinery, tools and equipment, fixture and fittings or furniture, computer equipment, motor vehicles. If you have accounts for those items on the balance sheet, you're more likely to use them. So if you see an expense for computer equipment, it gets posted to the computer equipment asset account rather than some sort of computer equipment expense account. And I would go as far as removing those sort of expense accounts or renaming those expense accounts just so they're not used by mistake. So you want asset accounts for motor vehicles, plant and machinery, furniture or fixtures and fittings, computer equipment, tools and equipment. Don't have expense accounts for those things. Okay, what is number 5? Personal transactions showing in the business accounts. I could tell you all sorts of stories. I have seen all sorts of personal transactions showing in the business accounts. Holidays are a common one. I once saw a £12,000 double glazing bill put through the business accounts when it was obviously the director's personal home that had been double glazed. The business didn't even rent or own any property. Ensure that personal transactions are not showing in the business financial accounts. Now, what's the best way to stop this happening? Create a balance sheet nominal account, an asset or liability, or even an equity account named Director's Loan Account or DLA. Any items that you consider personal can go to this account, and then the year-end accountant, the tax accountant can look at those transactions and they can decide what to do with them. The rule of thumb is a business expense should be wholly and exclusively for the business. If there is a personal element to an expense, I suggest you post it to the Director's Loan Account, the DLA on the balance sheet. Don't post it as an expense to the profit and loss. Thank you so much for watching. Don't disappear. Let me show you how to access all this free content. No sign up, no registration is required. Go to my website, freebookkeepingaccounting.com, click on free stuff, and you'll find tons and tons of free courses. Like I said, no registration is required. Here is the reconciliations course. At the top here is a payroll course for wages journals. If you need to learn reconciliations on bookkeeping software, I have links for those courses in my Xero, QuickBooks and Sage pages. All of this stuff is for free. Thank you so much for watching. If this has been helpful, please like, please subscribe, please leave a comment below. It all really helps. This is the Bookkeeping Master signing out.